sector. Tata Motors retail sales numbers disappointed the street. But on the other hand, M&M has seen a steep target price increase from CLSA and an upgrade too. Vinnii joins in with the latest. Vinnii.
Yes, so in terms of Tata Motors, we're seeing a bit of a pressure coming in today. Tata Motors at one point of time, intraday, we had seen it touch its 4-month low level as well. So keeping an eye on Tata numbers on the back of the JLR wholesale numbers that have come in, which is down by 10% for the quarter ended September. So Q2, 10% downtick is there. Overall JLR units that they've managed to sell is around 87,000 units versus a 96,800 units last year. When you're comparing it on a quarter-on-quarter basis, also we are seeing a decline of around 11%. So seems like a bit of a pressure that we're seeing in terms of the wholesale numbers. Now, what impacted the numbers this time? One, there was a supply disruption that was impacting Tata Motors. Other than that, in terms of JLR sales, delay in dispatches that impacted the wholesale numbers for JLR. Jaguar mix, that also is seen that it's coming down in Q2. And overall, when you're looking at it in terms of Range Rover Sport, Defender, the share of that has marginally declined versus last quarter. Last quarter, it was around 68% of these brands, and now it's come down to 67%. So key to watch out for this. Though the management is optimistic for the second half of the year, so not much of a worry, but at least in the short term, some bit of a blip. Q2 seems like the impact of disruptions in terms of supply was the major reason for that, and that is why Tata Motors is down. UBS is maintaining a sell. They're saying China is no longer fast-growing market in terms of the global car market. Premium cars might be more resilient, but market share loss is likely to continue for the company. So yes, that is what they're keeping an eye out on. JP Morgan too actually is maintaining the overweight rating. Weak wholesale numbers is what they are highlighting, and the mix, that is what they're watching out for. M&M, on the other hand, we are seeing an upgrade that's come in for M&M this morning from CLSA. They've upgraded the stock to an Outperform target price of 3,400 rupees per share. They're saying profitable growth in SUVs, rising return on equities to drive sustainable re-rating for M&M, as well as mainly this is going to be led by XUV 3XO, Thar ROXX, as well as the upcoming EV models of M&M. That will be something that will drive the growth for the company going forward. They're anticipating an ROE of 20+% that one is expecting going forward, and the margins also is something that they're watching out for. So for FY 25-26, they've raised the EPS target by 5%. So keeping an eye out on M&M, that's trading on the positive side with gains of almost 2%.
Okay, yes, a big mover on the Nifty pack. Thank you so much for joining us with all those details, Vinnii. Time for a short break now. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.